Our next speaker is sponsored by Fidelity Life and NIB New Zealand. Carl Richards is a certified financial planner, creator of the Sketch Guy column at the New York Times, author of 2 books on making smarter decisions with money, the founder of the Society of Real Financial Planners, and is currently working with Concilium right here in New Zealand. His presentation today is sponsored once again by Fidelity Life and NIB New Zealand. Could you please give a huge Kiwi welcome to Carl Richards, ladies and gentlemen. Carl Richards, come on.
Thank you. Yeah. Let me get my Apple Watch off my wrist for a minute. Mike promised me you wouldn't touch my iPad, and he has. He's advanced all the slides as he was failing around up here. So let me get back to the beginning. There we go. Just a couple of housekeeping items before we dive in. My wife makes me tell you this every single talk. I'm supposed to say that I am often wrong, but never in doubt. Okay? So I'm going to present some material today that I feel really, really passionate about, and I'm going to present it fairly passionately, right? Opinionated. If you have a problem with it, I have no problem with that. Feel free to use that email address right there. I will see it, I'll read it, or we can talk in the breakout session. That email address is there. It's hello@realfinancialadvisors.com. I put it there because I see people. I'm going to run through some of these slides, these sketches that I draw for the New York Times. And I see people every time I present, people try to copy them down real quick or take pictures, which you're completely welcome to do. I have no problem with that. But I will make it easy on you. If you'll just send me an email, I'll send you all the images, right? So just send an email there. With that, I'd like to take you back to 1995. My goal actually today is to talk about the future of advice, but before we do, I want to go back a little ways and tell you just a little bit about my history, and in doing so, a little bit of the history of the industry. So let's go back to 1995. I was married in the summer of 95. I was an undeclared major at university in Utah. Now, when you're an undeclared major in the States, it just means you have no idea what you want to do, right? So you get to go waste a couple of years while you try to figure out what you want to do. And you do that all at your parents' expense, right? I'm an undeclared major at the University of Utah. I'm digging ditches at a landscape company. I was the newest hire there. So I was an undeclared major, digging ditches for a living, not a whole lot to offer. Somehow I convinced my wife to marry me. Anyway, we get married in the summer of 95. She has recently graduated with a degree in finance. And she has a job. You know, both of those are good things, right? A degree in finance and a job. And I come home one day, and she's got out the Help Wanted ads, the newspaper, right? And she's looking, back when we had jobs in America. Oh, that's the other thing I forgot to tell you. I'm going to tell you some really funny jokes, but they're American. And so if you don't laugh, it sort of makes me feel bad, right? So if they're not funny, I'm going to tell them anyway, but if they're not funny, we'll figure that out pretty quickly, and I'll tell you when they're funny, and then you can just laugh, and we'll all get along just fine. Does that work? Okay, fair enough. All right, good. Good. So, Help Wanted ads. Back when we had jobs in America, let's get it. She was looking through the Help Wanted ads, and she found this job that we both thought was for a security guard. And the room's pretty big, so it may be hard to tell, but I'm uniquely qualified to be a security guard. And I thought this would be great. I'll work the evening, sort of graveyard shift, and I'll still be able to go to school full time. This will be great. I'd love to be a bouncer or a mall cop, like whatever. Maybe I can get a badge. In the States, you even get a gun if you're a mall cop. So I thought this will be great. I'll go there and I'll work. This will be great. So I went to apply for this job, thinking it was a security guard job. And I remember it was in the summer, because I remember it was raining. It's unusual for rain in the summer. It was a rainy August day, summer in the States. And I went in to apply for this security guard job. And I get halfway through the interview, and there's been no questions about kung fu or self-defense. And there's all these questions about things that I honestly, I had heard of, but I could not even begin to tell you what they were. Stocks and bonds and mutual funds. I came to find out the newspaper ad said securities, not security, right? And I didn't know the difference. But I got through the interview, and they narrowed it down to 2 of us, which tells you a little bit about the applicant pool that day, for certain. They narrowed it down to 2 of us, and they came out. We were sitting next to each other. And they came out and said, Carl, I'm sorry, we only have one position, and we've offered it to him. Now, this is a direct quote. The guy turns to me and says, hey, man, I don't want the job, you take it. So that was my triumphant entrance into the securities business, right? And shortly after that, 2 weeks after that, I found myself working in a really large brokerage firm that you would all recognize, actually. And they had a major international call center in Salt Lake, where I was living at the time. And we were in a training room, and the training room was not unlike this. I mean, a little smaller, but no windows. And we were studying. And everything we were studying, because I was still trying to figure this whole thing out, I'm like, but I figured out everything we were studying, we were using math and spreadsheets. And so I thought, okay, it's not a security guard job, but it looks like it's a math job, right? I think this is a math job. And everything made sense. I was in there for 6 weeks in this room. Everything made sense in this room, right? 2 + 2 always equaled 4. It didn't matter how scared or worried or nervous you were. Everything made sense. And then there was this big event in the equity markets in the States. I'm gonna do this anyway, even though I know we're a long ways from the United States. Let's just see if you can guess. Now, if you've heard, there's probably a few of you that have heard this story before. If you've heard it, please don't ruin it. Okay, there was a big event in the equity markets, and I'm gonna give you hints, and we're gonna see if we can guess. Anybody under 30 in the room? Just don't worry about what I'm about to talk about. Well, let me explain to you. There used to be these boxes, and we would plug this cable from the box to the wall. And then Al Gore invented the internet. Come on, I mean, that's really funny. Like that one's really funny. And then you'd go to get on the www web, World Wide Web, and you could go make a sandwich and make that noise, right? Remember, so that's about the time we're talking. 1995. Summer of 95, big event, equity markets. It's an IPO, so now you can start guessing. It's an IPO, a technology company. Nope. No. Anybody remember Netscape? Yeah. Netscape. So Netscape goes public. Were any of you in speaking broadly, were any of you in the security business back then? Yeah, right? So Netscape goes public. If you remember that day, it was like a shot across the bow, I think, at what was coming later. Netscape originally priced at $12 a share. They delayed opening and repriced at 24 before a single trade was, the demand was so high they repriced at 24. They closed the day at 76, right? So 12, 24, 76. We were in a room like this, remember, like where everything made sense. And the doors sort of bust open, and there's almost like there was alarms going off. Because the call volume was so high, they asked all of us to get out of there and go help taking phone calls. Now, they pulled me aside and said, Carl, listen, every question you get asked, the answer is please hold. Right? So I was like, I can do that. But I remember walking out of this room where everything made sense. Everything was rational. Everything fit in a spreadsheet and a calculator. And walking down the hall to the trading floor where nothing seemed to make sense. Right? Nothing was rational. There was fear, greed, the emotion sort of was dominating the experience. Now I remember, I didn't make any grand conclusion about it, I just remember being struck by it. That this wasn't about money. Now, shortly after that, I left and I went to work for another big brokerage firm that will go without being named, but it has a bull as its symbol and it's owned by a bank. And I kept asking, and this is the question I want to answer today, is what's my job? I was a problem employee because I kept saying like, hey, what's my job? Like, what am I supposed to do here? I didn't know this at the time, but apparently my wife has told me enough now that I know I'm relatively competitive. So I like to know the rules so that I can beat you, right? Like that's the whole, so I was like, what's my job? Can I just understand what the job is? And I kept getting told the same answer. And the answer was, if this is the average investment, I'm going to highly abbreviate. If this is the average investment, right? My job, what I kept getting told, was to find this. The above average investment, right? We even have a word for it in our industry, don't we? Alpha, right? That was my job. Find alpha for clients. Now, I thought, okay, well, if that's my job, I better get really good at it because, again, if that's my job, I better get really good at it. So I went and got a bunch of professional designations, tried to figure out how you do this thing called institutional consulting, right? Manager search and selection, finding the right managers, performance monitoring, all of that stuff. And I built these really elaborate, disciplined buy and sell methodologies for managers, right? So this was 96, 97, when this sort of new wave of fee-based asset management was coming online at the States. Now, all my buddies in the industry, the older guys in the industry, which actually unfortunately was predominantly guys, at least in the office I worked in, they were all still stockbrokers, selling stock for a commission. And they were really nervous about this new thing called fee-based. This is 97, keep in mind. Fee-based asset management, right? So I was trying to get really good at that. I'd build these really disciplined spreadsheets, and I would have this experience that was really discouraging. Every time I would build the spreadsheet to find this, right, the above average investment, every time I would identify it, right after we would commit our money or our client's money to it, always right after, it would become the not-so-best investment, right? I thought that was just a problem for kids from the hills in Utah. It sounds like it happens here too, right? Right after we pick great investments, they become the not-so-great investments. Now, sometimes things take a little while for me to figure out. So I'd go about 18 months, and then we'd have to fire a manager, right? We'd hire one, and then we'd have to fire one. And then we'd hire a new one. In fact, let me tell you a quick story. It's a friend of mine. His name's Jeremy. We're going to see if we can. Yeah, so Jeremy, we hired, and I can't even remember who it was, but we won't use names because it's not the manager's fault. Did you realize that? It's not the investment's fault that investors behave poorly, right? So we hired manager A, and about 18 months later, we have to terminate manager A. And we hire manager B. And about 18 months later, guess what happens? We got to terminate manager B, and guess who shows up in our screen? A, yeah, manager A. So I called Jeremy right here. Jeremy happened to be a friend of mine as well as a client, and I said, hey, Jeremy, we got to sell manager B. They've, whatever, slipped out of our, I can't even remember what we called it back then, right, our performance audit or whatever it was, and we've got this new manager we're going to hire. It's manager A. And Jeremy was like, whoa, wait a second, didn't we just get rid of those guys 18 months ago? I was like, well, yeah, but that's not the point. And he said, you know what I'd like? He said, I would like to see the performance of manager A for this whole time period. I'd like to see the performance of manager B for this whole time period, and I'd like to see that versus my account. And I said, hey, that's not how it works. And he said, I know, but I'd like to see it. And you know the moral of the story is either one, A or B, did better than Jeremy's account, right? And that brings me back to this problem that kept happening. I kept getting told that this was my job to find this, so I kept trying, and the result ended up being this, right? If you put a person in here, this is where my art skills come in handy, the average investor is sad, right? There's this big gap between the average investment and the average investor. Now, I thought that was just me, but I had the best training in the industry. I worked for arguably the best firm in the industry back then. And I'm not dumb, at least I don't think I am, so I was like, if I can't do this, I didn't know that hardly anybody could do this, right? But if I couldn't do this, I'm going to get out of the industry. And what do you do when you don't know what to do with your life? You go to law school. That's what I thought I'd do. Come on. I told that joke once. I forgot I was speaking to the Bar Association. There was 450 attorneys in the room, and I told that joke, and they thought it was hilarious. So anyway, this is how I started. This is the experience I kept having, right? The well-intentioned search for this was leading me to this big gap. And I was super frustrated. But when I discovered that it wasn't just me, turns out that this data runs, I've looked at it in all the different countries in the world. There is a gap between the average investment and the average investor. The only thing I can figure out it was due to is poor behavior. So I started calling it the behavior gap. And I got really fired up. In fact, it changed my career because I realized, wait, that's not my job. Sure, if you can do it, awesome, great, more power to you. But it's not my job. My job, what this data said to me was if I could just close this gap, right? If I could just pick mediocre investments, by definition average, right? If I could just own the average, and if I performed well, and behave. If I could just own mediocre investments and behave, I would outperform 99% of my neighbors. And that, ladies and gentlemen, is what life is about in America anyway, is outperforming your neighbors, right? Come on. Give me some. I mean, that's like funny. That's not funny in the States, it's funny here. Okay, great. So anyway, that's what happened. And I started to realize, look, it turns out that the job of a real financial advisor is not this, right? It's more focused on behavior. More focused on behavior. Now, I started drawing these things. As you can tell, this concept's a little difficult to explain to somebody without an image. And so out of an act of desperation once, when I was trying to explain it to clients, I drew it. And a client said to me, hey, can you put that on a piece of paper so I can take it home and show my spouse? And when I saw it leave the office, I thought, hey, I could draw more of these. So I drew this one. I'll just give you a minute to let the logic of that sink in. I think we'll just take a minute, and I'm going to do this really specifically. I'm going to tell you a story about how to use this image. You email me, you'll get this image, or you can just, it's not that hard, you can draw it yourself, right? Right? So, and I'm going to tell you this story, and you can use this story, and you just need to swap out a New Zealand-based story for your own, all right? Because I'm still going to use the S&P 500 in 1997, 98, 99. It's just the best story. I mean, I've seen these stories over and over. I've used the tulip bulbs before. We could certainly use the global financial crisis. Like there's stories all over the place about this, but I still love 97, 98, 99. So I'm going to also tell it the way I tell it to clients, because I'm going to beg you later, I'm going to beg you to believe me. They do not know what you're saying. Like so I write a weekly column for the New York Times every week for 8 years now. And every week I get emails saying, could you please tell your industry to stop talking the way they talk? Like, I don't understand my financial advisor. Will you please tell them to make this more simple? And those are not coming from dumb people, right? It's like you showing up at a medical conference and expecting to even understand a word that they said. So I'm going to use words that I use. 97, 98, 99. This is exactly how I present this with clients. I just say, hey, do you remember 90? Actually, sorry, I use green because we always use green for things going up. You remember the stock market in 97, 98, 99? All right, we had this huge run, and I draw that, just like that. We had this huge run in 97, 98, 99. The S&P 500 up over 80%, the NASDAQ up over 120%. Do you remember that? And normally people will shake their heads. They've at least read about it in the history books at this point, right? It's called the technology, like the dot-com bubble. 80% on the broad market, 120% on the NASDAQ. We've got this huge run. Now, we know how we behave, and I want you to notice something about that term, we. There's this new tendency in our industry when we all got really smart to behavioral finance concepts, because that's all the rage now. We seem to think that suddenly because we know about behavioral finance, it makes us smart and all the people dumb. Right? Like we're just as prone, behavioral finance studies humans, and you're human, you're just as prone to your own blind spots as the clients you're talking to. So I find it useful not to say, hey, we know how you dumb investors behave. I find it useful to say, we know how we behave. We know how we behave because we track money going in and out of different types of investments. Now notice, in this room I could say we track net inflows or net outflows into equity funds. But what I said was we track money going in and out of different types of investments. Now, we know, for instance, how much money went into stocks or stock-based mutual funds during the month of January. Now, let's go to January of 2000. Oops. January of 2000. Okay, we know that the record for money going into stock mutual funds in the United States, the record for money going into stock mutual funds in 1 month was $24 billion. Okay, keep that in mind. $24 billion was the record in 1 month. Okay, January, right after this massive run, not here, not here, not here, not here. Now, we didn't know what was going to happen next. We didn't know that part, right? But we did know this huge run. January, here's the record, 24, $46 billion. March, 54, I know it's messy, it's not a problem. 54 billion. Sorry, it's February, shortest month of the year. 54 billion, March, 39 billion. Right? Pouring money. Now, no prizes for guessing, but what month did we hit the market high in the US during that cycle? No prizes for guessing. March. Right? So just in time to collectively get our heads taken off, we were pouring money into the equity markets. Do you know of anything that we behave that way with? Like, can you imagine going to well, we'll use Tesla because they've been in the news. Can you imagine going to the Tesla dealership and saying, hey, I didn't want a new Model 3. And they say, gosh, guess what? You're in luck. We just marked them up 50%. And you say, awesome, I'll take 3. Right? Like, it doesn't happen with anything else. Now, if you think we're crazy on the way up, you should see what we do. Switch to red. Everybody notice that? You should see what we do when the market goes down. But if you just fast forward to October of 2002, first time in history, first time since we've been keeping these records, where we had 5 months in a row of more money coming. I could say net outflows with you. In fact, I will, just to move it along. Net outflows. 5 months in a row of net outflows. Please don't use that word with clients. 5 months in a row of net outflows. First time ever. The 5th month was October. Again, no prizes for guessing what month did we hit the market low for that cycle. October. Right? Don't raise your hands, please. Anybody become a real estate investor in 07? Right? Anybody becoming a real estate investor today? No, I'm just kidding. I'm not making any statements about real estate prices in New Zealand. And then we just keep doing it over and over and over, right? I put that up online, and I kept getting more and more emails. And then I did this one. Again, that needs to sink in. Somehow, the Wall Street Journal found that interesting and ran a picture of that on it was one of their back blogs, but it was the Wall Street Journal nonetheless. And that led to this email. And I'm not skipping a whole lot of steps here. This was sort of out of the blue. I got this email from the New York Times. Now, if you live in the United States and you are in our business and you wanted to write for someplace, it would either be the Wall Street Journal or the New York Times, right? Like, that's where you'd want to write. I have no writing background, and as is obvious now, I have no art background. So to get an email from the editor, I still tease him about this. Apparently, when you're the editor at the New York Times, you can send emails to complete strangers with just the first initial of your first name, as long as it's capitalized, right? So I knew the answer to this from my security guard background. The answer to this was, sure, right? And then I'll figure it out later. So I said, how do you want to do this? And he said, this is what we'll do. I'll introduce you on Sunday, and I'll say that we're taking questions that you're going to answer with 250 words, 200 to 400 words, and a sketch. And I'll send that question to you Sunday night, and by Monday morning at 9 a.m., I need your answer. Do you guys see a problem with this? Right, Sunday night, I'm going to get the question. It's going to go in the New York Times. It's the first time I've written anything really for anybody. A few people are going to see it. So I stayed up all night, right? I got the question. I stayed up all night. I wrote this thing. And if you've tried to write 400 words, it's way harder than writing 2,000. Sorry for the long letter. I didn't have time for a shorter one, right? That whole thing. So I stay up all night. Here's the first. The first one was this, about just the danger of mixing investing and entertainment. And the point of the column was go to the movies instead, right? Right, let's separate out what this thing is. I promise you the movies will be more entertaining and cheaper. That was the point. I thought it was pretty good. I woke up, there was, I can't remember the number, 20 plus comments. Now, where I'm from, we are nice to each other. Right? That's especially to strangers. So I assumed that that's what everybody did. So I logged in, I was like, 20 comments, this is going to be great. I thought they were like congratulatory letters. So I go to read them and they're just scathing. Right? I email my editor. Well, first I called my mom, we got through that. Because we needed to do it again. My mom actually called me before I called her, and she's like, are you okay? I can saw those comments. They're so mean. Who are these people? So I called my editor, and I said, listen, because we were going to do it every day for a week. I didn't know this was an audition, but we were going to do it. I thought it was the only shot I had. I didn't explain that. We were going to do it every day for a week. So I had to do another one on Tuesday. So I called Ron, and I said, Ron, listen, if that's the way this is going to be, I have to be able to take the gloves off too. And he said, Carl, go ahead. It's an opinion piece, and this one ran shortly after. There's something about, I've learned about this, in the art world there's all sorts of weird rules. And there's something about showing art as it originally appeared. But I just want you to understand something. I think you understand the point here. At this point, I had because it was early in the work I was doing with them, there was 2 editors. One of them was a female. She thought it was funny. But if look, I have 2 teenage daughters, so I mean this sincerely. If you're going to send me an email about this, I've already gotten it, right? I got those emails. I would never, it would have been just fine to just do that, right? I would never want my daughters to feel any less capable to make good decisions. But I was trying, stereotypically, I now realize, to get at that herd behavior, right? Now, the interesting thing is if you want to have an interesting experience, try making fun of teenage girls in a relatively liberal newspaper like the New York Times and see what happens to you in the comment section. Right. All right, so then we ran this. This is still, we could talk forever about this, and I feel like we still need to. I don't understand why we say this over and over and over, and then what's the first thing you do when a new client comes in with a big pool of money? The first thing you do is you go find something that's done really well, and you show them what's done really well, and you put it in what's done really well, despite the fact that that has 0 statistical predictive factor on what's going to do well going forward. So we could talk about that all day, but we've got a lot more important things to talk about. So look, that was a relatively humorous journey down my experience in the industry. Now I want to sort of take you to the big problem we have. These things are kind of funny in the abstract, but they're really painful when you look at them on an individual level. And I want to just tell you real quickly about a story. A friend of mine named Craig. Craig's a really good friend, really close friend. And Craig was a real estate developer. And in fact, I wonder if we could pull off, well, I'll try drawing this. Craig was a real estate developer, and in it would have been about 96. 96, he was, if you know anything about real estate projects, typically, at least a lot of real estate developers get into real estate development by accident, right? Some of them they may have bought their first condo in college, and then they moved out of that and they rented it, and they thought, hey, great, and then they bought a duplex, and then they may sell the duplex and buy a fourplex, and then suddenly they're doing big developments. And it's full of sequencing risk, right? Because if your last project, and you're rolling the profits into each new one, and your last project hits at the wrong time, you could be cooked. Craig's last project was going well. It's 96. Things have gone well. And as he's selling off bits of this project, he noticed in this retirement account over here, his portfolio had done really, really well. His advisor, I remember his advisor's name. His advisor's name was Carter. Carter had him diversified. And for this conversation, I'm just going to pretend like he only owned 2 things. Large cap growth, large cap value. I can even remember the name of the mutual funds. Large cap growth, large cap value. He'd had other stuff, but we're just going to pretend for a minute it was just that, because it was predominantly those 2 asset classes. In 96, 97, 98, large cap, the only thing that did anything in 96, 97, 98, 99, and even the early parts of 2000 was large cap growth, right? So 96, as Craig is selling off pieces of his real estate development, he's looking at his retirement account thinking, why am I doing real estate? This is crazy. I earn 17, 18, 19% of my retirement account, and I don't have to do anything. This would be great. I'm just going to sell this off and put all the money, and I'm going to invest it the same way. I'm going to have Carter invest it the same way. Well, 96 goes on. 96, we have large cap growth do really well, like 30%, and large cap value only did something like 12. And Craig was upset about that. Tried to get Carter to fire large cap value managers, right? The one that only did 12, and move all the money to growth. Now, if any of you deal with entrepreneurial clients, you need to understand something right now. That makes sense to them. Right? Business 101, you have 2 divisions, one doing poorly, the other doing really well. You kill the one that's doing poorly, and you reallocate the assets to the one that's doing well, right? The resources to the one that's doing well. So rebalancing just doesn't click, right, until they go through it a couple times. And it certainly didn't click for Craig, but Carter talked him into it. 97, they rebalanced at the end of 96. 97, we have the same story. Craig's a little bit frustrated. 98, same story. 99, same story. I remember, and Carter talked him into it each year. And I remember over the holidays of 99, right? So that would have been early 2000. Remember from our earlier story where we were, right? I remember at the holiday party, Craig telling me, I finally got Carter to sell those terrible value managers and move everything to growth. In 99, his growth manager did 54%, and his value manager did 17, only 17. Get those guys out of here. 17, what are you talking about, right? Move all the money to 54%. Just in time, his value manager was down 83% over the next 2.5 years, right after he'd moved the money there. And this is getting really messy, right? Put all the money in here, and then this happens. Craig sells, right? I've had enough. Can't take it. Stress is killing me. I'm done. And he goes back to real estate. In 2003, 4, he finds a project in California. California real estate in 04, right? Just in time for something else, right? They just, and I'm not kidding, it's now been about 6 months, 7 months. They just finally sold that project off. They have about a tenth what they had in 96, right? How long is that? A long time. Yeah, let's just call it 20 years. 20 years, they have about a tenth of what they had. Now, there was no reason for that, other than just really, really poor behavior. So the question becomes, like, what can we do about that? Because there's nobody better suited than you to be doing something. Now, we can't always, right? Carter was to be honest, Carter was a good advisor. There was just nothing he could do in that case. But there's nobody better. There was nobody else there. So what can we do about it? And the first thing I want to talk about is it's the third rail of the investment industry. We all use that Dalbar study that shows investments did this and investors only did this. We all use that study as a way to say, look, hire us. We're really great. But the thing you have to remember is that Dalbar study was done based on mutual fund assets. And at the time of this, well, at least 2 or 3 years ago, I haven't looked in the last 2 or 3 years, 80% of the money inside mutual funds got there because an advisor put it there, right? 80% of the money was advised. So do I have to make the next sort of logical step? Right? We're part of the problem. We think for some reason, I mean, I know why, because I grew up in this industry. I know why, right? For some very obvious reasons, we feel like our job is to be finding great investments all the time. And that well-intentioned behavior is leading to this. Right? We're not preventing it, we're causing it. Now, I know I'm probably speaking to the choir. Probably most of you are not. But most, speaking generally of the financial services industries, most of us are encouraging the problem, right? Not solving it. So we've got to realize that it starts with us. Yeah, I can't tell you. Really funny story. Remind me in the hall, I'll tell you. Actually, let me tell you real fast. Sorry. There's a great mutual fund manager who runs a phenomenal company that in every way, it's just amazing. Their returns have been great. They're a small cap value manager out of the United States. They have a charity associated with their, I mean, just a really, really good guy. And he was talking to me one day. His name's John. He was talking to me one day and he said, I'm really worried about this gap because he could see it with their investors, right? Money floods out of the fund after a period of doing poorly. And then they turn around and they do well for a while and money rushes into the fund. Go look at Bill Miller's legacy if you want to see a dramatic example of this. So John's really worried about it, saying, look, I need, and I was saying, John, look, you've done your job. You delivered returns. And he said, yeah, but none of our investors are getting them, right? Because they're leaving. Like, we've got to figure out how to solve this problem. And that's us at the middle of that center, at the middle of that circle. Now, part of the reason why it's such a problem for us is this little challenging little thing called confirmation bias. that we're continually bombarded by the financial pornography, CNBC. We're continually bombarded with that material, and we think, and then we go to events and we get training and we do all this stuff and we think, oh, that must mean our job. And then we start thinking, if I'm not doing something, clients will think I'm not earning my money. And even worse, when we've got perverse incentives where we only get paid if changes are made, right? That's another problem. So we've got to figure out, in the end, we have to figure out how to serve the clients. But once we start thinking that there is a reason to make a change, if you don't know about confirmation bias, let me just tell you, this is how we make decisions. This is not a sexist statement. It actually shows up in the research. It's predominantly how men make decisions. We make a decision, and then we do our research. And the research consists of summarily dismissing anything that disagrees with us and gathering evidence to support what we've already decided to do. Right? And no matter what sort of harebrained idea you get about how to invest money, can you find support for it now? Absolutely. Just type it in Google. You will find plenty of friends that will agree with you. Right? So we just need to be careful about this. We honestly could spend a full hour on just how do we deal with confirmation bias ourselves and how do we teach clients how to deal with it. But for now, just know that it's a problem. Right? Study it a bit. Understand your own blind spots. But it's a big deal. So once we admit that we're part of the problem, we need to start learning to talk about money. Now, what I mean by this is, look, the only reason you should be investing money is in the support of your goals. Seems like a reasonable statement. If you haven't been taught how to talk about financial goals, chances are you're not investing based on those financial goals because you haven't identified them yet. Right? So we've got to learn how to talk about money. We've got to teach other people. Now, my wife and I sort of should be an example of this, and we're not. My wife's got a degree in finance. I play a financial planner in a newspaper, right? And we'd been married 15 years at this point. I'd been a CFP, a certified financial planner, for 12. I came home from a trip. Now, I want you to listen carefully and see if you can help me. Maybe there's something I didn't hear. But I came home from a trip. The kids were in bed. It was late at night. I sit down with my wife, some quick pleasantries, and then she says to me, Karen remodeled her kitchen. And boy, it looks great. Do you hear something that I missed? Because I was... Now, let me just make sure I got to clarify something. This is not a male-female thing. This could have easily, and it has been, me saying, Drew just got a new mountain bike. It's really cool. Right? So this isn't it just happened to be, I'm using an example that my wife was the one. She's normally not the one. In fact, let me just make a disclaimer. Everything you're about to hear from here on out is my fault. Okay? Okay, so she says, Karen remodeled her kitchen and boy, it looks great. Now, I was busy, right? I was busy calculating. So I finally said, my answer to Karen remodeled her kitchen and boy, it looks great. My answer, the next thing out of my mouth was, Corey, we can't afford that. And my wife, who has no problem expressing her opinions, has a finance degree, was a CFO of a really small real estate company, she knows her way around numbers, turns to me and says, what are you talking about? And I said, well, you just said you wanted to remodel the kitchen. She said, no, I didn't. I said, Karen. I said, I know, but that means... And she said, no, you know what it means? It means you've been gone for 4 days, and I wanted to have a conversation with you, and this was just the entry point to a conversation which is now over. Right? And I said, whoa, come back, please, come back. What about the trip to China? Carl, I don't want to go to China. I've been saving for China. What about the new X5 that, whatever her name is, Lisa is her name, Lisa had? Carl, I love my car. Right? We realized that night that we had spent all this time talking around money because every time we went to talk about it, actually about it, it was like an electric fence that we didn't know was electric. Right? We thought it was supposed to be a rational discussion. Wait, I just opened the Amex bill. Why are you yelling at me? You know what I'm saying? So if you can figure out how to talk about money, and I don't mean markets and economy, I mean actual money, goals and values. This means people may cry in your office. It's a warning. If it hasn't happened to you yet, it's coming your way. I'm telling you, I've seen what the future looks like. If you want to be, I don't mean nervous, if you want to be excited about your opportunity, just go spend a few minutes around companies like Betterment and Wealthfront in the United States. Like, if you want to get really, the value of advice, professional advice, professional advice has never been more valuable. But it's also never been more clear about what it is. Right? All the stuff that is not what it means to be an advisor is getting stripped away really quick. If it can be done by a calculator or a spreadsheet, it's going to be. Which makes a huge argument. Like, if you can outsource that stuff, you should be doing it. In fact, if you want a white paper one of my colleagues wrote about outsourcing the investment process, send me an email or give me your card afterwards, and I'll send you a white paper about how to outsource the investment process, right? But it's putting that kind of pressure. And the cool part about that pressure is it's a better job anyway. Like, the job of a real financial advisor is a better job anyway than the one that we used to have, where we had to have a hunch, buy a bunch, and sell it to people, right? So, if we're going to talk about money, we need to be talking about the right things. Yeah, somebody told me that that dot around the stuff that was actually useful was way too big, right? Speaking of things that you shouldn't be talking about, is that funny? Do you know that well enough for it to be funny? Like, in the States, I get a standing ovation, right? All right, we'll just move on real quickly. Yeah, we're going to talk about that one later because I want to be clear on time. So, listen. Most of us spend most of our time talking about, right, how the product has done, whether that's insurance or mortgage or investments, right, most of our time. And all I'm suggesting to you is that we start shifting a little bit of that time. I'm not saying performance reporting is not important, although I would argue it's actually not, but I'm not saying it's not. I'm just saying it's not nearly as important as progress towards goals, right? Helping clients, look, they don't care. I promise you, I have thousands of emails to prove this. They don't care about your solutions at all. They care about their problems. And until you take the time to understand their problems, it's just a rotating sort of gerbil wheel of clients. If instead we can be focused on solving their problems and their goals. Let me just give you an example. If I hired you as an advisor and I never outperform an index, but I meet every one of my goals, am I going to be happy? Yeah. If I hire you as an advisor and I outperform an index every quarter, which isn't possible, but let's just say I did, is it possible that I could outperform an index every quarter and not meet my goals? Sure it is, right? Would I be happy if I got positive performance reports every quarter for 20 years and didn't meet any of my financial goals? No, I wouldn't be happy. Right, so I'm just suggesting, whether you're in the mortgage industry, insurance industry, or the investment industry, that we get our focus where it should be, and that's on solving people's problems, right? Solving people's problems and learning to talk about it. Because I'm telling you, in fact, I promise you, that if you think there's still a job that looks like this, a nice clean box around the money, those jobs are going away quick. Because that stuff can all be done faster, better, cheaper. Anything that can fit in an algorithm will, right? So what I'm suggesting to you is that your job actually is this awesome job here. Now, I know that means retooling some skill sets, but there's plenty of tools to help you with that. At first, it's just the job of convincing ourselves that we need to go there. Okay, the next thing after we've done that is we need to simplify. This is my favorite slide of the whole presentation because it used to say simplify, simplify, simplify. Do you get it? And actually, last night when I was preparing these slides, I took the period off. I did, actually. I actually took the period. I was like, hey, look, I can make it even simpler. This is really scary for some reason. We think that this is our job. This is how the industry treats people. Oh, I need to invest some money. Oh, yeah, that'll be good. Oh, I need some life insurance. Oh, geez, what are the tax implications of that? Oh, gee, gosh, what account should I open? Where should I do it? How should I? Oh, no. And as an industry, what we're trained to do to people is drop them right there, right? And then we sort of look down. It's like digging a hole and saying, like looking down and saying, I'm the only one with a rope. Like, nobody likes being treated that way. I know it's an old sales technique, but nobody likes being treated that way. What they actually want, I promise you, is what they actually want is for you just to take them there. Some of them are metaphorical, stereotypical engineers, may like to circle in around there, right? And when they do, it's awesome, because you're like, oh, you care about how smart I am? Right? But you can't fake. You can't fake being here. This is called sales. Right? And those are the people in the industry that can sell shoes, cars, investments, who cares? It's just sales. But real financial professionals live over here. Right? They've been through it. And even if you're brand new, right, you've taken the time to understand, you've studied, you're a professional, you're technically competent at this. I know most of you in this room fit that. Right? Some of the best financial advisors I've ever met, their financial plans end up being on a legal pad, right? Or on a whiteboard. Just simple. And I promise you, just try it next time. See how simple you can make this. I used to get so worried that clients, because we'd think, oh, if I make it too simple, they won't need me. It's just not true. The simpler, I have found the more I tell people that they could do it on their own, the more they wanted my help. So what they really want is to know that this is taken care of. So I promise you, and I've got hundreds of stories, including this one real quick. This is one of the images. At the New York Times, I'll send these images in, and sometimes I'm just like, oh. I mean, the writing typically is pretty easy every week. It's kind of hard, but the easier part is the writing, and sometimes the images are, because you can only do so many Venn diagrams or bar charts, right? And sometimes I just run out of energy, and I get tons of feedback about these, so there's a lot of pressure. That last 30 seconds was a counseling session. Thank you. Send me a bill. I feel better already. But one time there was all this pressure, and I was like, I got nothing left, and I just wrote this. I did this. I was like, oh, this is the one. I'm always worried. I scan it through this Fujitsu scanner, and I send it off, and I'm always worried the email's going to come back and say, hey, man, that's great, but this is silly. Like, you're done. Right? I said that one. I was like, this is certainly going to be the one. Put it in there. There's all these comments. This is brilliant. This is genius. Like, and they weren't sarcastic. Like, people were. So all I'm trying to tell you, in fact, I ran into the CFO of a really large technology company that you would all recognize at a dinner party where I live back home. And he said to me, Carl, I know your work. I love it. My favorite one is income must be greater than or equal to expenses. I was like, you're the CFO of like, that's scary. And he's like, yeah, I've been telling people for 20 years, but now that I have it on my wall, everybody believes me. So all I'm telling you is I have been to the place called Too Simple, where monsters live, right? And it will be the end of your career. And I'm telling you the water's fine. Like, come in, right? It's fine. In fact, if you understand elegant simplicity, Oliver Wendell Holmes said that he wouldn't give a fig for the simplicity on this side of complexity, but he'd give his right arm for the simplicity on the other side. Now, metaphorically, if Oliver went, I'm assuming metaphorically, he would give his right arm. People will pay for simplicity. I know I will. Right? If you could just make my life simpler. I went to the vet one time. My dog, Zeke, is sick. We have this awesome German short-hair pointer. We're leaving for a trip, interestingly enough, to Australia. This was 2 years ago. I'm leaving in like the next day. There's all chaos at the house. We have 4 kids. We're trying to juggle everything, figure everything out. The dog's got a stomach problem. I'll spare you the details as to how we knew why he had a stomach problem. So I take him to the vet, and the vet's name is Dr. Kate. And I work right across the street from Dr. Kate. So I'm like, here, Dr. Kate, check him out, tell me what it is. I'll be back at the end of the day, pick him up, fix him, please, that would be great. I come back, and Dr. Kate's like, Carl, we've examined Zeke, and you have 3 options. Now, what just happened to your head as soon as I said 3 options? I was just like, I thought there was going to be a fuse that was going to just... And she starts to go into option 1, and I'm still thinking, 3 options? And I interrupted her. I said, Dr. Kate, whoa. Just tell me what to do. Like, just tell me what you want me to do. And she's like, no, I need to walk you through the options. And she started going, and I was like, no. And she just kept going, and I was like, shh. I actually shushed the vet. Shh. Dr. Kate, stop. Zeke is your dog now. You just tell me, here, Zeke and the credit card. Right? Just tell me what to do. Right? Now, if I almost blew a fuse over the dog, what are people thinking after a day of surgery and they have to go home and open their statements? Come on. right? Like, they just want you to take the problem. But guess what they have to be sure of before they're going to allow you to take the problem? That you thoroughly diagnose them. I was sure Dr. Kate thoroughly, not because she's a doctor, but because I had trusted Dr. Kate. She thoroughly diagnosed my dog. I could tell you the same story with ER rooms, right? Why do you fill those prescriptions that you can't even read? You don't even know what it is. Do you go home and do a Google search on the medicine you're about to fill? Have you tried that? It's a disaster. Like, don't click on images. It's a disaster. But you just go home and fill it. Why? Because you were thoroughly diagnosed. If you even got a whiff of not being thoroughly diagnosed, you better believe you'd be getting second opinions, right? So just taking the time to thoroughly diagnose. All right. Now, in this world where we're all so scared of robo-advisors, I think the only solution in a world where we're scared of robo-advisors is to be more human. Like, be more human. Like, it's awesome. Take all that algorithm stuff. I don't like it anyway. Right? Like, I already have spreadsheets that we in the industry have been doing robo-advice for ever since the abacus was invented. Right? So we just need to lean into this idea of, because life isn't like this. It doesn't fit in an algorithm. Can you imagine asking an algorithm, in fact, the one that I think is the best is, how many of you have had clients who wanted to pay off their mortgage? I had a client that had a 3% mortgage and wanted to take money out of his diversified, super efficient, low-cost, algorithm-based investment to pay off his 3% mortgage. And I said, why? And he said, because I feel like it. What? Like, that doesn't fit in the algorithm? What do you, like, it doesn't give me, it's like, that's interesting. I've had other clients feel like that too. Let me walk you through the pros and cons of that. And if you still feel like it, can we have a party at my house? You know what I mean? Like, I've been to mortgage burning parties. I've never been to efficient, low-cost, diversified algorithm parties. You know what I mean? So some of these things don't fit in. So I'm just saying we should be more human. Be more human. Let's just take a peek. Oh yeah, we have time. Here, we'll do this real quick. Here's what I think first of all, we need to take the time to figure out why people are doing this. If you want a little fun game, like a cocktail party game, just start asking people why they're invested the way they are. A new client comes in the door, try that. Why are you, it looks like quite a beautiful portfolio you have there. Why are you invested the way you are? What are the answers you're going to get? It's hilarious. Like, I saw it on the Financial Pornography Network. Like, the really smart people say, I read about it in The Economist, right? But the only right answer to that is because that portfolio represents my greatest chance of meeting my goals, right? That's the only right answer, and nobody says that. It's the right answer for institutions, by the way, too. I did a lot of institutional consulting, and the only right answer to why are you invested that way is because it matches the institution's goals, right? So if we can understand, take the time to thoroughly diagnose, which we'll talk a little bit about in the breakout session, we can take the time to thoroughly diagnose, then we're back to this problem of, look, we build a plan. Now, the industry, we have this backwards. We are all running around. Everything you read is about products and markets. Oh, you don't like blue, Mr. Client? That's fine, because I have green. You know what I'm saying? Now, what should really happen is we should start with a plan. And I'm not necessarily talking about a 2-inch thick doorstop, right? But some understanding. It could be a simple investment policy statement, a simple statement of goals. It could be a 1-page financial plan, some understanding. Based on that plan, Mr. and Mrs. Client, we think we should invest the money this way. This is the process. And then, and only then, do we go out and look for tools to populate the plan. They're the least important part of the whole thing. But it's all we ever talk about. It's like we're running around arguing whether we should take a plane, train, or an automobile on a trip before we've even decided where we're going. Right? And so if you get this right, what's awesome is when what do clients get the most scared about? They don't call you saying, hey, I want to change my plan. They say, have you seen what the market's doing? Aren't we going to do something? I need to get out. Where are they focused? They're focused here. This is where all the problems come, all the behavioral problems. If you've taken the time to do this, guess what you can do? You can use the please hold method, and you say, hey, Rob, I hear you. It sounds like you're really scared. Can you hold just a second? I want to go grab your file. And I know it's already up on the computer, but still, use the please hold method. You put them on hold. You just give them a chance to breathe. You get a chance to breathe. Their fight or flight, that's going on a lot, like they're scared. They made a call to you. They've been thinking about this for 2 weeks, I promise. They called. You pull out the file. And in the file, you see what they told you their goals were. And you can pick the phone back up and say, Rob, hey, I understand you're nervous. And if it's true, only if it's true, you would say something that I would say, because it is true. Rob, I get nervous when I read the news too. Right? But I just pulled out your file. Let's just review a few things. Before we get to that whole thing you said about selling, let's review a few things real quick. Right? Last time we talked, you told me that the reason we're investing this money is primarily so you can spend time with your family, mainly outside, and serve in the community ultimately. Is that still, oh yeah, Carl, whatever, yes, yeah, that's it. And the way that translates is you want a check of X $1,000s a month, and you Are those still your goals? Yeah, those are still my goals. Right? And then do you remember? Right? We can bring them out of this sort of crazy spinning back to this foundation of the plan. But we can only do that if we've learned how to do it. Right? It's the only solution I've found to managing behavior. Is the only way to get somebody to say no to poor behavior is to get them to say yes to a deeper yes. Right? A deeper yes. Now, the last thing as we wrap up here is just learning to let go. This is the ultimate blessing that you get to provide to the world if you can do it. Is getting to this spot where people learn to just detox a bit and realize, look, I don't have to worry about that anymore because my advisor's taking care of that. And then they go through stages, just like any normal detox. They go through stages for sure. But you know you've won when you get to the point where they're not worried about it anymore. Right? Now, I had an experience with my mom. We have, is lacrosse? Okay, good. It's a game. Okay, good. Lacrosse is a game you play here? Okay. I asked that question once in Canada, and they were like, we invented lacrosse. I was like, sorry, brother, I thought that was hockey, right? Like, I didn't. So anyway, lacrosse. We're at a lacrosse game. My 10-year-old son's playing lacrosse. If you've ever been to a lacrosse game of 10-year-old boys, it's just 10-year-old boys knocking each other down with sticks, right? It's pretty darn great. Like, it's a cool game. So I'm there. It's a beautiful day, clear, crisp fall day. I've saved a seat for my mom, my son's grandma. Right? She put up with me all those years so she could have one of these. I think of them as like a dividend day for grandma, right? She's coming, the game's about to start. I see her from 100 meters away walking towards to me. And from that far away, and you all, those of you with mothers know what I'm saying, I could tell from that far away something was wrong. Right? She sits down. I say, Mom, we have a little pleasantry. Mom, what's wrong? And she says what all mothers around the world say. I've spoken all over the world. I've tested this. It's true. All mothers around the world. Oh, nothing. Like, it's always, oh, nothing, right? Oh, nothing. Mom, tell me, no, really, what's wrong? Now, my mom has no finance background. And in the United States, we don't spend any time talking about currency. I'm just giving you some warning about what I'm about to tell you. We don't spend any time. We just do what we want and leave the rest of you to figure it out, that's a funny joke. Come on. Actually, it's not. It's actually not all that funny, is it? So I say to my mom, what's wrong? And she goes, the dollar. I'm just so worried about the dollar. And I was like, Mom, what? I wanted to say, what AM radio station have you been listening to? But I didn't. I just said, I absorbed with empathy. I put her on hold. I pulled out her plan. I said, well, last time, right? And I just helped her understand, and this is my final point, right? If you can do this job, our job, the wonderful opportunity, sort of, I would even say sacred trust that you've been given, is that if we can get people to focus on the things that matter and the things that they can control, right? This wonderful overlap. Not only will they be better investors, and I'm doing this in order on purpose, not only will they be better investors, right? They will be happier. They will be happier, and so will you. And with that, thank you very much for your attention.